Hello and welcome to this video. Just as a point of reference, because we are going to be talking about what the markets have been doing, I just want to say at the time of recording this is January 2019. So what I want to talk about is how over the last few months traders that I've seen who were making massive returns have since made massive losses, and some have even blown their accounts, huge returns to blown accounts. And I want to talk about why that is and how it probably could be prevented, and hopefully it will prevent you from making some massive losses too. So first of all, we want to talk about market type. So looking at the S&P 500, the stock index, if you look at a chart from about April 2018 through to end of September, perhaps 2018, we were in quite a slow, steady, uptrending bull market. At the start of October in 2018, all hell broke loose. If you notice, if you were trading, you'd know about it. There was a lot of panic, there was big declines, massive volatility, and the market changed, it shifted, the type of market. There are different market types, and so previously we were in a slow, sort of low volatility bull market, and then we went into a massive load of volatility when we had some big declines. And what happened was traders which were making big returns, I'm talking silly returns like 20, 30, 60, 80% return on their account every month. Now, especially for a newer trader, that's not sustainable. It's probably more luck than judgment. And probably what was happening was they picked on something that was working particularly well over those quiet bullish months, and then the market shifted, the market changed, and it all just suddenly stopped working. Happens quite a lot. And the trick is to recognize when the change is going on, recognize whether it's just a few days and then of downside and then the market's going to continue going up, or whether it's something a bit more severe like it was. So the key is to recognize. It's very difficult to do in the moment, and then adapt. So your strategy that was working quite well with the slow bull market is not going to work now, so you need to employ a strategy that's going to work better now, or maybe even stop trading. And I can display this for systematic people, traders like me, who develop algorithmic strategies looking at past data, back tests. What you can see is, and some of these traders that I'm talking about were actually using mechanical or algorithmic trading strategies. But when you develop strategies, I want to show you a little chart, and this is typically a timeline. Let's say this was, just for argument's sake, 2008, and this is 2018. And this here shows your account value. So if you were trading this particular strategy that I'm going to show you, over the years, I'm going to draw a line and show you exactly how it would look. I mean, ideally, it's going to look like that, isn't it? That's ideal. It's not going to work like that because markets don't work like that. When I design strategies, I like them, and they might end up roughly something like that. Absolutely, very roughly. But what I want to demonstrate is what was possibly happening to these traders over the summer, and then what changed. Now, any old strategy will have good periods and bad periods. So if we say that this strategy actually looks like that. Now, we started, let's say our starting balance was 10,000. I don't know if you see that. 10,000 in 2008. Had we traded this strategy all those years, we would have ended up in 2018 let's say, back at 10,000. So we haven't made any money. But in the meantime, there's been some massive periods where it's worked, massive periods where it hasn't worked. Let's say, look at this period here, for example. That uptrending period there of, let's say that was April and that was September of a particular year. So within those months, you can see the equity of that strategy was huge. It was going up, couldn't put a foot wrong. And that's unfortunately what a lot of these traders were doing over the past summer or the past few months. They'd found something and it just happened to be working ever so well, and they'd become overconfident in it. They probably hadn't backtested it to see how it had done prior to when it was working very well. And you can't blame them. They think found something that's working, think it's great, going to put loads of money, they're going to risk loads of money. And then unfortunately, in this case, in 2018, September, October came in and this happened. So suddenly, all the money they'd made is all gone again. And that's just absolutely typical of, just a basic mechanical strategy. Not a good one. I wouldn't trade that one. But it's just to demonstrate that there's periods of months where any old strategy can work really well and then it'll fall apart. So just be careful. That's, I assume, what a lot of these traders were doing. They hadn't back tested it. They'd started trading it. It was working. You probably wouldn't want to know whether it was working well in the past or not, because you're so excited that you're making 30, 40, 60% a month trading it. But then, unfortunately, as time goes on, the market type changes, it stops working. So that's probably the main reason why these guys lost their accounts. Combined with, of course, and I go on about this a lot, is bad risk management. You have to have good risk management. So again, you can't blame them. They might have had a few weeks where this period they were doing really, really well. So they can't put a foot wrong, so they're just going to risk more. They're going to get a bit greedy and just keep risking more to make more. And unfortunately, when things start to go wrong, very, very quickly can you lose a lot of money and lose your account. So that's about all I want to say for this video. So bear in mind, markets do change, market types do change, and if you find something that's working extremely well, then make sure you backtest it, because it may be working really, really well just for a very small period of time, and it could be ready to change and stop working. And just another key thing, something that I do all the time, I monitor my strategies. So if you were trading this strategy here, it was doing really, really well. The key is, with any trading strategy, is to recognize when it starts losing money. Recognize that if it's been making loads of money and suddenly you could do it a number of ways. You could do it with the drawdown, the amount of losers you're having in a row. For example, during this great period there, you might have been winning 85% of the time, and then suddenly, if you had a load of 3, 4, 5 losers in a row, suddenly that might be an alarm bell to say, oh, actually this isn't working anymore. Perhaps I should stop trading it. So that's the other thing. Make sure you know when your strategy or when your trading method you think might have stopped working. So hopefully that might have cleared something up. That might help you not lose your account in the future. Have you been trading or looking to start trading? And if you found it helpful, please give me a like. There's some more articles, more videos over at my blog at thetransparenttrader.com, and I'll see you on the next video.